More than half of Gen Z is already doing this, and most of them started before they turned 25. A new report from Empower just dropped, and it shows that 55.7% of Gen Z now has a Roth IRA. Their average account balance grew 27.5% in a single year, from $30,000 to nearly $39,000. But here's what matters more than those numbers. It's not how much they have. It's when they started, because the single most powerful force in personal finance, compound interest, doesn't care how smart you are. It only cares about one thing: time. And right now, if you're in your 20s and you don't have a Roth IRA, you are actively losing thousands of dollars every month you wait. If you want more videos that break down wealth building for your 20s and 30s with actual data, subscribe before you keep watching. Let's start with the question everyone has. What exactly is a Roth IRA? A Roth IRA is a retirement account. You put money in, it invests it, it grows, and when you retire, you pay zero taxes on the money you pull out. Zero. Let that sit for a second. You invest $200 a month for 40 years, it grows into $600,000, and you owe nothing to the IRS when you take it out in retirement. That's the deal. Now compare that to a traditional IRA, where you get a tax break today but pay taxes when you withdraw. For most in their 20s, the Roth wins. The whole point of a Roth IRA is pay taxes on your money now while the rate is low, then never pay taxes on it again. Not when it grows, not when you withdraw it at retirement. Take two people. Both invest $200 a month in a Roth IRA. Both earn a 7% average annual return. That's roughly the historical stock market average after inflation. Both plan to retire at 65. Person A starts at 22. Person B starts at 32. Person A, starting at 22, ends up with approximately $655,000 by retirement. Person B, starting at 32, ends up with approximately $309,000. Same $200 a month, same 7% return, same retirement age. The only difference is when they started, and that difference is $346,000 in tax-free retirement money. Let me say that again. The 10-year delay doesn't cost $24,000. The $200 a month for 10 years that person B skipped, it costs $346,000 because those early contributions compound for decades. For 2026, the Roth IRA contribution limit is $7,500 per year. That's about $625 a month. Where should you open one? I recommend Fidelity, Schwab, or Vanguard. For beginners, Fidelity is the best starting point. Fidelity has a $0 account minimum, fractional shares, and zero expense ratio index funds like FZROX. This is the single most common Roth IRA mistake I see people make, and it's the least talked about. You open the account, you transfer $500 or $1,000, and then you stop. The money sits there. A Roth IRA is not a savings account. It is a container that holds investments. When you deposit money, it sits in cash, often in a money market fund, until you tell the platform what to buy. If you left your money sitting in cash, even for a year or two, here is what that costs you. Fix it right now if this is you. Log in, find the cash balance, click Trade or Buy, and invest the full cash balance. You don't need to pick stocks. You don't need to research companies or read earnings reports. For most people building a Roth IRA in their 20s, the right move is simple. Buy a total market index fund and leave it alone. At Fidelity, FZROX. At Schwab, SCHB. At Vanguard, VTI. These funds own a tiny piece of every major U.S. company. When the economy grows over the next 30 or 40 years, your balance grows with it. The takeaway: Roth is powerful. Time is your best asset, and the account does nothing until you buy something. If this video helped you understand what a Roth IRA actually is and why it matters for your 20s, subscribe to Dollar Decoded. I cover investing, budgeting, and debt with real data for people building wealth from scratch. Every video is designed to give you something actionable in under 15 minutes. The best financial decision you will ever make might be the one you make in the next 15 minutes. Go open that account.